Now let me be clear, private money lending on its own is great. Infinite banking on its own is also great. But when you combine the two, the results are astonishingly better. My name is Elridge and I've been in real estate for 11 years now, and I currently lend out over $2 million a year. My personal goal and also our company goal is to scale that to $10 million annually. And I want to show you exactly how we plan to do that using this powerful strategy. By the time we're done here, you'll understand exactly how to combine private money lending with infinite banking. And I'll give you a clear step-by-step plan to follow. Whether you're a capital partner working with a lending company like mine, someone looking to start your own private money lending business, or even someone who already uses infinite banking but hasn't tapped into the lending side yet, this is for you. If you're not combining the two yet, you're missing out on a massive opportunity. So let's break this all down, starting with the basics, and then we're gonna move to the high level execution. What is private money lending? Private money lending is simply lending out capital, your own capital or your capital partner's capital, to real estate investors, developers, business owners in exchange for interest. You're not going through a traditional bank, you're the bank. Here are a few key traits that define private money lending. Secured by real estate. Your loan is backed by property itself. That means if something goes wrong, there's collateral. Short-term durations. Most loans are for 6 to 24 months, perfect for flips, bridge loans, or cash out strategies. High interest rates. Rates range between 8% and 16%, which means your money is working hard for you. Quick funding. Unlike banks, you can fund deals in days, not weeks or months, because you're underwriting based on the asset, not the borrower's credit. Flexible terms. You can offer interest-only, deferred payments, rehab draws. You structure the deal how it makes sense. It's one of the fastest ways to grow wealth while maintaining control and security, and that's important. That's why I do it and why many others are getting into it. But now, let's focus on something that makes it even more powerful, infinite banking. So what is infinite banking? Infinite banking is a strategy that allows you to become your own bank using the cash value of a life insurance policy. More specifically, I prefer to use an Index Universal Life Insurance Policy or an IUL because of its growth potential. Here's the breakdown. You fund a life insurance policy, not just a debt benefit, but to build cash value. That cash value grows over time, often linked to an index like the S&P 500 with upside potential and downside protection. As it grows, you could borrow against it tax-free and use those funds for anything, investing, paying off debt, and yes, funding real estate loans. So instead of using a traditional bank to finance purchases, you use your own banking system. Let me paint the picture. You want to buy a car. Instead of an auto loan, you could borrow from your IUL policy. You pay yourself back with interest. That interest doesn't go to a bank. It goes right back to your own financing system. That's the power of infinite banking. Now that we understand what private money lending is and infinite banking, let's talk about where most people store their money. Because where your money resides matters. And here's where people go wrong. They store their money in the wrong places. Let's look at the typical places people keep their capital. You have a checking account, a retirement account, high yield savings account, brokerage accounts, an IUL policy. Each of these vehicles have its strengths and weaknesses, but not all are optimized for lending or compounding growth. Guys, do me a huge favor and hit that like button and subscribe button. Thank you. It truly helps the channel grow. For every benefit that I have listed here, I'm going to put a check mark if the vehicle has the benefit and an X if it doesn't. The benefits are earning interest, protections, liquid, tax advantages, no limit on contributions, can they hold title, money can be in 2 places, pensions for retirement, a debt benefit, wires, and no regulations on purchases. So which vehicle earns interest? Retirement account, a high yield savings account, a brokerage account, and an IUL policy. I'm not including a checking account because it's minimum interest. Which vehicle is liquid? We consider an account being liquid if you can access the money in 24 to 48 hours. So a checking account is liquid, a high yield savings account is liquid, brokerage account, and an IUL policy. Which vehicle has security? A high yield savings account, a checking account is FDIC insured, and the IUL policy has a floor which protects you against losses. If you want to understand more about floor and cap, I break that down in my video titled, What is Index Universal Life Insurance? IUL Explained, and you can see that in this corner or this corner. Which vehicle has tax advantages? The retirement account in the IUL has tax advantage. Which vehicle has no limit to how much you can contribute? A checking account, a high yield savings account, a brokerage account, and an IUL. And if you're wondering about MEC limits, the modified endowment contract rules that cap how much you can stuff into a policy. Just know this, you can always open a new policy if you exceed the threshold. The wealthy do this all the time. So I do consider the IUL being unlimited contributions. And we know a retirement account has a limit of $7,500. Which vehicle can hold title? A retirement account can hold title. The owner on record can be the retirement account. Which vehicle is capable of doing wires? A checking account, a high yield savings account, brokerage account, and an IUL. Which vehicle can the money be in two places? A brokerage account and an IUL policy. The money is earning interest in the brokerage account and is earning interest in the policy. And you could borrow against both to perform infinite banking. Which vehicle has a death benefit? The IUL policy. Which vehicle can pay you a pension when you retire? A brokerage account, IUL, and retirement account. Which vehicle has no regulations to what you can buy? All vehicles except the retirement account. With the retirement account, you can't buy anything you want. And with the retirement account, you are penalized if you take the money out too early. All these vehicles are not created equal. Each one is designed for specific needs. If you're doing your investing, savings, and lending out of one account, stop that immediately and join our free finance community. The link is in the description. And schedule a call because we need to talk immediately. When you look at it like this, the IUL policy stands out. It checks almost every box. And if you're strategic, you can use it to build wealth in ways that other options simply can't. So now let's bring it all together. Here's the power of combining infinite banking with private money lending. Let's say you have $100,000. You could lend it directly from your checking account. You earn 10% interest, and that's it. When that money is gone, it's gone. Or you could store that $100,000 inside your IUL policy. That money continue to earn interest and compound inside the policy. Then you borrow against it at 5% and lend it out at 10%. That's a 5% spread called arbitrage on money that's still earning interest inside the policy. That's how you earn in two places at once. A lot of people only understand simple interest. What I'm describing is compounding interest with leverage. Over time, this gap grows exponentially. Let me give you a real life example. Eltis, one of my capital partners, Eltis used to lend cash directly. He was earning 10% returns with us at Vertical Capital. Not bad at all. But then we had a conversation and I asked him, what if your money could earn interest in two places at the same time? He decided to redirect his lending capital into a properly structured IUL policy. And here's how it played out. Eltis commits $40,000 annually to his policy. His cash value grows inside of the IUL at an average of 6% annually. When he lends $200,000 through us, he borrows against his policy at 5%. We pay him 10% interest only, which equals $20,000 annually. Now the math. His policy still earns $12,000, 6% of $200,000. The cost to borrow is $10,000, 5% of $200,000. That leaves a net gain or arbitrage of $10,000 inside the policy. Then there's the $20,000 from lending. After tax, let's just say 30%. That's $14,000. So instead of just making $14,000 like before, Eltis makes now a net of $19,000 after paying the interest on the loan and the taxes on the $10,000 arbitrage. That's a 35% improvement just by changing where his money resides, nothing else. And as compound interest continue to work, that $10,000 yearly advantage becomes hundreds of thousands of dollars over time and eventually seven figures. Why this works so well? Traditional lending is transactional. You earn interest and that's the end of the story. But infinite banking turns your money into an employee that never stopped working. It always growing even while you deploy it elsewhere. It also removes the need for credit checks, bank approvals, financial statements. When you borrow from your IUL policy, it's instant. No underwriting, no red tape. It's capital on demand. And once you understand that, you'll never store your money the same way again. Now you might be wondering, what's my first step? Let me walk you through it. Step 1, set up a properly structured policy. This is crucial. Not all life insurance agents understand how to design a policy for infinite banking. You need low-cost, high cash value policies, not policies loaded with commissions and insurance costs. Our finance community can help you get this right from the beginning. The link is in the description. Step 2, start lending. You could partner directly with us at Vertical Capital. We work with capital partners every day who are funding deals across New Orleans, Baton Rouge, and beyond in Louisiana. Or you could start your own private money lending company. Either way, you're building income backed by real estate. Step 3, recycle and reinvest. As your loans get paid back, you reloan the funds, creating the velocity of money that builds wealth predictably and powerfully. If you're still storing your money in just one bucket, especially if that bucket isn't working for you, now is the time to make that shift. Cash sitting in a checking account is doing nothing. But when you place your capital in the right vehicle, like an IUL, and pair it with private money lending, you unlock a completely new level of control, return, and financial peace. I've personally seen what this strategy can do. I use it in my business, my capital partners use it, and if you're serious about building lasting wealth, you should too. Join our free finance community. The link is in the description. You can access questions, get help setting up your policy, and even schedule a call to become one of our capital partners. Don't let another year go by without putting your money to work the right way. If this brought you any value, like this video, subscribe to the channel, and comment below with your biggest takeaway. I'll see you on the next video.